All right, here we are. We are live on YouTube. In
Yes.
I am in the Lake Wylie, Clover, York area. Keena, where are you calling from?
And I am in the Belmont area, so not too far from
Not
you,
too
on the
far
other
from
side
me.
of Lake Wylie.
Yeah, you're on the other side of Lake Wylie, exactly. So we're super close to each other. And on this YouTube live, we're going to talk about the three ways that Lake Wylie homeowners, you don't have to live in Lake Wylie to apply these tactics, but three ways that homeowners are using their equity to make their next move in 2026.
Yes.
And so, really, just to like start it off, if you have owned a home in Lake Wylie or Fort Mill or Clover or Belmont or any other area of Charlotte for 3 to 5 years, you're sitting on equity that you probably haven't even thought about in a while, right?
Hmm.
And so, most of the homeowners that I talk to, they either don't know what it's worth or they assume they can't move because rates went up, and today we're going to bust both of those myths. And I will start with just a personal story because we moved, this will be our second year in our new home. But most of the home owners that I talked to, and I just had a family that I was showing homes to the other day, I had one that was convinced, and the other one, the other spouse that was not convinced. And I'll tell you why. Because they were married to that 2.75% rate that they got when they bought their home in 2021. And I can totally relate to that because we were in the same boat. Only I was the one that was like, I was the one that was like, I don't want to let go of this rate. But what I didn't realize is we had a lot of equity built up in our home, even though we weren't in it for 20 years. You don't have to be in your home for 10 or 15 or 20 years to have equity built up in it.
Mm.
And so once you use, we were able to use the equity we had built up in that house, and we bought the dream house that we have now, our empty nester home, and that would actually fit our lifestyle because the home that we were married to with the rate did not fit our needs at all. Like, it was a 2-story house. We never went upstairs. I only went up there to flush the toilets to make sure the pipes were working, and that was pretty much it. Other than that, we lived on the main level. So why did we have that big house? Because I was stuck in my brain with this 2.75% rate. And I feel that that's where our homeowners are today. It's like, we have this house, it doesn't really fit our needs anymore, but damn that rate. And so we're
Hmm.
going to talk today, and Keena, you're going to teach us today what we can do to utilize the equity we have in our house to really, in our current home, to get what we really, really want.
Yes. And I can also raise my hand to that. I have done the same strategy as you, Jen. I moved from the Concord area, and it wasn't, I thought actually for a little bit it was my forever home, but then I realized how much I love lake life. And I found a home on the lake, and you know
Yeah.
what, I made it happen a lot sooner than I ever anticipated,
Mhm.
because I didn't realize how much equity I was sitting on, and I could actually make my dream happen, which that's what I did 3 years ago. So
Yeah.
you can do it too.
Yep.
It
Totally possible. Totally possible. So we're
is
going to talk
possible.
today about breaking that myth, and we're going to teach homeowners today of how they can actually use that equity that they have built up in their home to their advantage. Because the main point is, yes, we're buying our homes to live in and all the things, but it's a
Hmm.
big investment. It's, for most of us, it is our biggest asset. And
Right.
so we just need to learn and educate people on how to utilize that asset to their advantage.
Exactly. And equity is just simply where your home is currently valued at right now versus what you owe. And a lot of people don't realize you may be sitting on tens and hundreds and thousands of dollars without even knowing it, guys, especially if you did purchase your home within the last 3 to 5 years, right?
Yeah, you're absolutely right.
And Jen, can you tell us really quickly before I get into my spill, what have you noticed around the Lake Wylie area specifically with home values?
Well, I've noticed that home values have definitely remained steady. They have not
Hmm.
dropped. People are surprised. They've actually gone up a little bit. They have gone up.
Yeah. Yep.
Um, the area of Lake Wylie and Clover, Fort Mill, basically, let's say York County, which is just south of the state line, Charlotte, just
Hmm.
south of the border. Most of them are within 30 minutes of the airport, just to give you perspective. Those areas are very desirable and very high in demand, especially for people who are relocating from New Jersey, from Florida, from Chicago, from Pennsylvania. Those are like a lot of that's a majority of the people that you're going to find that relocate here. They are from those states. And the one thing I want you guys to think about is people are moving from states where the cost of living is higher. And when
Hmm.
they come here and they see our property taxes, they see how much home you can get for the price, they are like just scratching, they're just taking up those homes, they're just snatching them up, right? So inventory is, I mean, the buyers do have more options to choose from. Don't get me wrong. It's not like 2021 anymore where people are fighting over and buying houses unseen. That's not the case. But when the home is priced right and it's in a good location, you will get multiple offers on it. You absolutely will.
Hmm.
But buyers have opportunities now to really take their time and find out what kind of lifestyle do they want, what neighborhood do they want? Do they want an HOA? Do they want to be close to the lake? Do they want to be in a neighborhood, or do they want to be on 1 acre?
Hmm.
They have that opportunity, but the homes definitely are, like I said, if they're priced right, they definitely are moving. It's a big desirable area, especially from people who are coming in from out of state.
Right. Yeah. Um, that's one of the key components that is important to consider is just finding out where your current home, if you are a current homeowner, where your current home is value wise. And you
Mhm.
can always, reach out to Jen, of course, to find out exactly what that looks like, because that's how we would determine how much equity you have. And if you are in the position to utilize that equity to either which we'll dig into deeper, but
Mhm.
purchase your next home, or even maybe you need to upgrade or update your current home,
Mhm.
kitchen, bathroom remodel. So it is more desirable to sell if you want to take a slower process to get your home ready to sell so you can move on to your next property. Whether it's a move up property or you're downsizing, like Jen, her empty nester home, which wasn't really a downsizing moment, but but it's possible, right? It can open up opportunities for you with home ownership.
Yeah, absolutely. Absolutely.
Yeah, yeah. And then really quickly, Jen, I was just going to see if you had anything else to add about the snapshot, the real estate scene around the Lake Wylie area.
No, I don't think so. I mean, it's
Okay.
very desirable for people who are moving from out of state. And what I find is the people that are coming in, home buyers who are coming in looking at my listings, or that I'm meeting during weekend open houses, or that are reaching out, they're from out of state. The people who are, but there's also people here locally that are doing, because life changes, right? So they're either extending their family, or their
Yep.
family is, they're downsizing. They're also active buyers within the community, but a lot of
Right.
the more, let's say, when we get the multiple offers, they're primarily
Uh-huh.
from, they'll be from people who are coming from out of state, because they're like, just, they can't believe the cost of living down here, and they can't believe the type of home that they can get for the price,
Right.
because it's
Yep.
still it's still a hot market. It's still one of those desirable communities where the home prices are still very, very reasonable.
Yeah. And now we can talk about how they get there, right? How
Yes,
do
it's fun.
they
How to
get
get
to
there.
the point where they can make that big move? I have clients all the time and they're like, how do people do this? Like, how do they have large sums of money for down payment? What are people doing? And it's real estate. Let's be
Yes.
honest. For the most part, it is real estate, right? The majority of clients that I talk to, they are using either equity from their current home or, whatever the case may be, they're just using that equity to their advantage to
Yes.
leverage to get into the next property. So the first thing that we'll talk about is how can you do that? Well, some of you may be familiar with HELOCs. It's a home equity line of credit, which works like a kind of like a credit card. It lets you borrow against the equity that you have in your current home. A lot of my clients right now, guys, they're taking advantage of this market and they are leveraging HELOCs or HE loans where they can use the equity that they're currently sitting on. It's kind of like they're renting that equity for a short term of time, so they can use that as a down payment to purchase their new home.
Mhm.
And it's great because in these instances, it could make sense if you are looking to make an offer on a home and you would like it to be non-contingent, or you were recommended by your real estate agent, that you get yourself into a position where you can make non-contingent offers.
Mhm.
So that makes you a stronger candidate for, whatever home that you may be considering on the market. It's a peace of mind for a seller on the other side whenever you are non-contingent. And Jen, I'll let you kind of tap into this from your point of view as a real estate agent, what that means to have a non-contingent offer and how that can put buyers at an advantage, right?
Yeah, of
In the
course.
market.
I'll give you a real life example.
Yeah.
So I had a listing here in the Lake Wylie Clover area, and last week we went under contract, but there were on this particular property multiple offers. We
Hmm.
received three offers. Um, Two of them had a home sale contingency, so they could not buy the house until they sold their house.
Hmm.
That's what they thought. And then the third offer we received was a non-contingent offer, meaning this person did not have a home to sell and they were free and clear, ready to purchase the house. They had their
Right.
pre-approved letter from the bank. Once I let the three buyers agents know that, hey, we are in a multiple offer situation, and of course I can never reveal the information on what each offer is. I just can say there's more than one on the table, so do what
Right.
you can.
Yep.
um, One family was like, oh my gosh, maybe I don't have to sell my house first. Let me just scramble and see what I can do to get in there. Now, unfortunately, so that is how like stuff can happen. And I
Yep.
think that a lot of times buyers don't realize like they're not receiving the education that they need either from their existing lender or their existing agent, or they haven't asked, or maybe they were given information, but they're nervous about tying into their home equity to get it. But it can cause you to, lose a bid on a house that you really, really, really love. So a
Right.
contingency means that you are unable to proceed with a home loan, or you were unable to proceed with, or you're kind of like proceeding with caution, let's say that way. So you're
Hmm.
putting a bid on a home and you're saying, now the only way I can fully go through with the purchase of this home, as long as I can sell my house. And if I don't
Right.
sell my existing home by a certain date, then I'm able to get out of the contract. Which, think about it, if you're a seller, that's a big gamble you're taking, because if you accept that offer knowing that the buyer has a house to sell,
Hmm.
and if they don't sell their house within the specified time frame, usually it's about 45 days. If their house does not go under contract within 45 days, then they get
Yeah.
out of the contract, and now you're back
Yep.
on the market, but you've already lost 45 days.
Yeah.
So you've lost 45 days of other potential buyers who are either cash buyers or don't have that type of contingency. They can just move on.
They
So
can
for
sit. Yep.
sellers, it's not as much as a get of a risk, and it's a smooth sailing to closing, which is what all sellers want. You want to put your house on the market. It's already stressful. Moving is stressful, period.
Right.
Whether you're
Right.
buying or selling, moving is stressful.
Yep.
So going through that process and knowing now there's this thing hanging over my head, like, oh my gosh, what if they don't sell their house? That just adds on to that process.
Exactly. And that's where a HELOC can come in. Whenever I have clients that they are interested in purchasing a home, and this doesn't necessarily work for everyone, it's based on your specific scenario, if this is an option for you or the best solution. But a lot of the times it's more so, ooh, you know what? I need cash. I need cash so I can take that cash and purchase my next home, and I don't necessarily want to be in a rush to sell my current home. What is the solution there? And that's when we typically present a HELOC, which can be a short term solution or a long term, depending on what you need it for. But again, it's just you borrowing the equity in your home right? It's kind of like you're renting that equity and you can
Mhm.
access exactly what you need for your down payment, whatever it takes to get into your new home. So that way you have the peace of mind that I can go ahead, use this equity to purchase my new home and slowly move out of my current home, right? And get it ready to sell, to hit the market if you have to even use that HELOC to add updates, whatever the case may be. But it's a tool for you to use, whether you're using that cash for the down payment or, renovations for the current home. It's a tool that can be a bridge to just take care of that gap between what you may need cash wise to get into the new home, or if you need to prepare your current home to be ready for the market, right? So there's
Yeah.
different ways you can leverage HELOCs for
And I would
sure.
say probably one of the biggest questions that you would receive, I imagine,
Hmm.
as a mortgage strategist is, okay, so I take this HELOC. Now, how long do I have to pay it back?
And that's a
How
great
long
question.
how long do you have left?
So, yeah. So, in this scenario, we're using our HELOC, right, to purchase another property. Um, there's a 10-year period where it's interest only on HELOCs. There's different HELOCs that have different terms, but the majority of them is 10 years. First 10 years is interest only. So, the payments are going to be super low. And most of my scenarios where my clients are using their HELOC to purchase their next home, they give themselves anywhere from 60 to 90 days to prepare that home, put it on the market, and however long it takes to actually sell their current home, just know that the principal that's due on that HELOC, even if they didn't use all of the HELOC balance, that would be due from their net proceeds. That's the funds that they would make from the sale of their current home that would
Yeah.
need to be paid off
Mhm.
because the HELOC is attached to your
Mhm.
current property or the property that you're selling.
Yeah.
So that becomes due along with the first mortgage if you have a first mortgage due as well.
Yeah. So I see how you're saying it's a bridge because you're borrowing the money now
Right.
to get into the house you
Mm-hmm.
want
Yep.
while you prepare your existing home
Yep.
to sell. And if
Yep.
there's cleanup or upgrades or small repairs that need to be done so you can get the top value for that house when you put it on the market,
Exactly.
that will
Yep.
allow you to have enough money to do those things. And
Yep.
then when it goes on market, when your old home is on the market, once you get to the closing table, then the escrow agent or
Yep.
the closing attorney will pay off your primary mortgage and your HELOC, and
The
then the
HELOC.
balance is what you get.
Exactly.
Mhm.
Um, so this is a great solution, especially if it is a short-term solution. HELOCs can also be great long-term solutions as well. But for right now, we're just focused on how to use that equity to purchase your next home.
Mhm.
But there's a multitude of purposes why people would pull out a HELOC against their property. There's also a HE loan. So a HELOC is an adjustable rate. So that does mean that the payment can change over time, but typically they are going to be lower rates than a personal loan, or if you're looking at, I don't know, like a credit card, anything like that. HELOC is going to be a lower interest rate. But then there's also a HE loan, which is a fixed rate, a fixed payment, and a fixed balance. So on a HE loan, some of my clients prefer that. They'll ask for HE loans because they want to know exactly what's due every month. That can be a great option too. But if you're looking at a short-term solution, typically the HELOC is the way that I would go.
Okay. And are
Yeah.
people coming to you knowing I want a HELOC or a HE loan, or is it, do you basically like, how do
Sometimes they
you?
do. Sometimes they do their research or they think they know, right? And then we have a conversation where they may flip their, whatever they thought their idea was of what the product is. But
Yeah.
once we uncover, most of my clients, once we uncover if there's a short-term need, it's usually a HELOC that we're working with,
Yeah.
especially
When
because
you're
there's
looking
no
to buy a new
prepayment
home.
penalties.
Yeah.
Hmm.
Oh, yeah.
Yep, that's huge.
Indeed.
Yeah. And then there's, of course, bridge loans, actual bridge loans that work very similar. Um, a bridge loan, again, is just another formal short-term loan, great for this exact purpose that we're explaining right now. Bridge loans are a little bit harder to find. There's more HELOCs that are available out there, more terms open for them than bridge loans. But
Mhm.
however, I do have quite a few lenders that offer bridge loans whenever you are looking to purchase a property. Actually, I will say this, a bridge loan can be beneficial over a HELOC in some cases because a lot of lenders will not count the bridge loan payment in your debt to income ratio,
Oh,
which
that's
can
good.
help you qualify, right?
Yeah.
That can help you
Hope I
qualify for
forget.
more loan on your next home purchase. So sometimes bridge loans are more favorable than HELOCs, just to let you know. But yeah.
And I mean, I know that, we're live, so we're talking about
Yeah.
what things are today.
Yep.
And people will have the opportunity to watch this later on because it's going to be on our YouTube channels. But um, what about like interest rates for HELOCs? Are they typically higher than a normal mortgage rate? Like,
Hmm.
what is the, I know
Yeah, yeah,
today.
you'll find most HELOCs are a little bit higher than a typical mortgage rate. And of course, depending on where the client standing is, how much equity they actually have, where their credit score is, that does play a part into terms when it comes to HELOC. But whenever you're comparing apples to a purchase rate, yes, they are higher than um, the purchase.
Okay.
And I would say bridge loans are probably right around there as well. Bridge loans are usually a bit higher even than the HELOC rates.
Mhm.
But bridge
Are there
loans, the
any,
purpose is short term. So it's not anything that, you usually are paying a balance on for a long period of time on a bridge loan. It literally is a short term option.
and HELOCs can be used, you mentioned earlier, they can be used for things like home renovations or updates.
Yeah. Yeah.
One thing, yeah. So one thing that I just want to say,
Yeah.
um, because we've owned a lot of houses in the time that we've been here on this earth. God has graciously given us this time, right? But when utilizing a HELOC to do home renovations or home
Hmm.
updates, do research on that upgrade or those updates to the home, because sometimes people think, like, we'll say like a pool, for example, or a basement. You might put, $50,000 into a basement or a swimming pool or a backyard oasis. That
Hmm.
doesn't necessarily mean your home is going to appreciate or you're going to be able to get that 50,000. It's not going to be a apples for apples added value to your home.
That
You
is
know what I
very
mean?
true.
So there are some
Hmm.
neighborhoods where people will put in a big backyard oasis and say, I've spent $100,000 on this backyard oasis. But if all the homes in the neighborhood are selling, for example, 500, and yours is the only one with this backyard oasis, it's not gonna, you're not automatically gonna add $100,000 in market value to your home, because
So
the
true.
market value of the home is what buyers are willing to pay. What is the
Hmm.
market willing to pay on your home? And you
Yep.
have to remember that appraisers, even though, let's use the same example, say the backyard oasis person decided to, okay, the rest of the homes in my neighborhood are selling for 500,000, but I have this backyard oasis, so I'm going to go ahead and add that $100,000 that I invested into this backyard oasis. So now you have your home on the market for 600,000, and let's say you get lucky and have a buyer that is all into that backyard oasis, and they're like,
Hmm.
okay, I'll pay the 600, but this buyer is getting financed.
Yep.
And guess what the home has to do? It has to
Appraise.
appraise. It has to appraise.
Exactly.
Yeah. And so
Exactly.
appraisers are looking at what are the home values for similar homes in the same neighborhood.
Hmm.
And they are not giving $100,000, let's say, credit or value add to the house. They're
Hmm.
just not. I mean, it's like a pool might have only a $20,000 um, market value add to a home. Same with a basement. It might only give 10,000, 20. I mean, I have no idea. Every
Right.
neighborhood is different and every area is different. But that's just one thing to think about if you're utilizing your HELOC for those improvements, especially if you're possibly going to sell it in like the next, 3 to 5 years. And that's on average. People move every 3 to 5 years.
Yep.
I don't
No,
make
that's
it.
great advice.
What's
Yeah.
happening.
Yeah. All right. So, point number two, another way that clients are utilizing their equity, I mean, it's just from straight up net proceeds. And that just means net proceeds would be your profit, what you make whenever you sell a home. And I don't know about you, Jen, but I have a ton of clients right now that are moving on to their second or third property and they're
Mhm.
using net proceeds and doing same day closes. It's
Yeah.
been like all over the place, which
Hmm.
is a beautiful thing that it can work out that way because these clients don't necessarily have to tap into their equity. They are literally buying and selling a home in the same day.
Yeah.
And I love when it works out like that.
Hmm. Yeah.
Yep.
And it's
So,
that is very,
yeah.
very nice. And it's people to have that luxury where they're able to like buy and sell on the exact same day. Talk
Yep.
about a smooth, seamless process. We're able to
Yes,
do that.
exactly. So, whenever it comes to you just utilizing your net proceeds, that's just again the difference of what you owe at closing, right? For the balance of your home. And then there's going to be like your fees, your closing costs, right?
Food stamps,
But
all that.
then the difference between that and what you're selling the home for, that's your net proceeds. So, a lot of the times, my clients, they'll already have an idea, they have already connected with their real estate agent, with Jen, right? And Jen tells them, hey, this is where your estimated figures will be whenever you are ready to hit the market. As far as your net proceeds, the profit that you'll make, you can let your lender know. So that way, you know how much cash that you'll have on hand to do, set up your down payment and closing cost.
Mhm.
So I am seeing so many clients that are able to successfully buy and sell
Yeah,
same
indeed.
day.
It can happen. And those
Yeah,
are
it
really,
can
really
happen.
nice. Those are very, very nice events. I mean, it's just like, and it's
Right.
exciting. And you're like, here we go. Now let's go to the new one.
Yeah, because you typically don't need a pod or a short-term place to stay, an Airbnb, a hotel. You don't need any of that, right? It's like you go from one door to the other in
Yes,
the same
indeed.
day, which
Yep.
keeps it nice and simple. Um, that's my favorite. But is there anything else that you want to add to that particular scenario, Jen?
Now,
Okay. Yeah,
everything else
that's
said was
just pretty cut and
pretty
dry,
straightforward,
right?
isn't it? Yeah, I think the
And
most important thing that you said was, make sure that you have done some homework in advance and just kind
yeah,
of get a good idea. Because as real estate agents, I mean, we can tell you this is what the market's doing. Now, we
right,
don't have crystal balls to say, okay, this is exactly what you're going to sell it for. It just depends.
right.
But we can get pretty close as to this is what other buyers, this is what other homes in your neighborhood, these are what other homes
Hmm.
in your area that are just like yours, bedrooms, square footage, etc. This is what they have sold for. This is what they're closed for. This is what
Yep.
house has gone under contract at. And so that gives you we can get pretty close as to what your home will
Pretty
actually sell.
good gauge. Yeah.
Very, very good gauge. Yep.
Yep. Very good. Now, the next way is more so a lot of my clients that need to do a little preparation, whether it's cleaning up some debt or we've already talked about how you can utilize those funds to do home improvements. But that's just a client decides to do a cash out refinance. And that's literally where you're taking on a new loan amount, right? And it's going to be more than where your current balance is. Again, we have to make sure that we have enough equity, but you are going to do a cash out refinance. It becomes your new mortgage payment, and you may be rolling in some debt, which is great. That's an option. And that can help you with your debt to income ratio so you can prepare for qualifying for your new home purchase, especially if you know that you are going to be going up a bit, maybe in the size of the home, or you just picked up quite a bit of debt from furnishing your home throughout the years, vacations, whatever the case may be. It's
Mhm.
more of a preparation. Hey, I know I'm going to be, in this home for maybe the next year, and I'm ready to start taking the steps to prepare for my next home, my move up home, move down home, whatever the case is. But yes, you can look at doing a cash out refinance to pay off debt consolidation,
Right.
or you could still use a cash out refinance to do home improvements as well. The difference between a cash out and a HELOC, oftentimes you may find that cash out terms will be a little more favorable than a HELOC, but a lot of the times I have my clients that are stuck in their twos and three something four interest rates, and then they get a little turned away by combining everything into one first lien, because that's what a cash out would do. It would combine your current mortgage with that new equity that you're looking to access. That
Uh-huh.
all comes together into one loan amount, and you would get a new mortgage payment based on that new loan amount and new terms.
So then your interest rate changes.
Your interest rate changes. Yeah.
Um,
Instead of going to a closing with cash, right? You're getting cash back whenever you are doing a cash out refinance, just like a HELOC, but it's a bit different from the HELOC because you are now in those fixed terms based on your complete new balance for your first lien.
okay.
Yeah.
So let me see. Who would be a good candidate for a HELOC
Yeah.
versus a cash out, cash back? What did you call it? A
I
cash
think
in?
the HELOC, like I mentioned before, I think HELOC is great for short-term buyers, or some buyers, they just don't really know what they want to do with those funds. They know they would like to have access to the equity and they kind of just want to let it sit. Some people just pull out HELOCs because they're like, I just want it for emergencies, or, if I decide to do a pool or whatever, they just want to sit on it for a little bit, right? Or they may want to purchase another property. Um, I say a cash out is more so suitable for those clients that know exactly what they want to do with those funds. A
Mhm.
lot of times it's my clients that are a little more debt heavy, or my clients that know that they have, quite a bit of renovations and it's just worth it to them to do a cash out. I mean, not everyone has a 3 and a 4% interest rate where a cash out can be pretty advantageous. In some cases, it can almost be pretty close to where you are right now, mortgage payment wise, depending on what their current terms
Yeah, but
are.
you're still able to stay within what you're used to paying,
Yeah,
but
exactly.
being able to remove some either debt
Yep.
or finally fix that
Yeah.
basement or whatever it is that you're trying
Yep.
to do.
Yep, exactly. So I actually had a VA client that I just helped recently. He knows that he wants to move within the next 12 to 16 months. So we
Mhm.
did a cash out for him because he needed to pay off debt. And that was his goal. He said, I'm going to pay off debt and I just want to save as much from here as possible to purchase a new home for my family. So that was the best solution for him.
Yeah, and sometimes payments are almost as close to what their mortgage is, so it's not
Exactly.
they're not
And
swap.
some people just don't love the idea of a HELOC being adjustable, right? They
Yeah.
want, again, they just want to know what they're going to pay every single month. They want that fixed interest rate. They want a fixed payment. So, again, that can be when a cash out is more favorable, or they may not want two different payments each month, two different liens against their property. They just want it to be one combined payment.
Yeah. So let me ask you this now. If somebody wants to understand which option is better for them, is there a fee for talking to you and figuring out what the
Absolutely
best scenario
not.
is?
No, yeah, there's no fee. It's just a conversation that we would have, and it's absolutely free. But from there, that would give me a really good idea about what your financial goals are, so we can put together a plan that makes the most sense for what those, future goals are, whether it's near future or maybe within the next 12 to 16 months.
Yeah. And probably
Timing makes a difference.
and maybe the second biggest question people ask is, okay, so I pick up the phone, I set a conversation or set an appointment with Keena, and then we
Yep.
start talking about what it is I'm trying to do. That means you're going to pull my credit and you're going to make my credit worse, Keena.
And that's not necessarily the case. A lot of the times,
Yeah.
based on our conversation, if we need just a good gauge about how ready you are to take that next step, we'll do a soft pull, which won't
Yeah.
impact your credit at all.
That's good. I mean, the people need to understand it with a soft pool because they get nervous about
Yeah.
even when I'm talking to clients, they're like, "Oh no, but my credit, I don't want anybody to pull it." I'm like, "Well, Mr. Customer, we're going to have to do that because
Well,
we
also,
have to get it unless you have cash."
right. And I have to remind people, why do we work on credit? Typically, you work on credit or work on your credit score because you want to be ready
Mhm.
financially to purchase something big. Typically, it's for a home purchase, right? Or to put you in a better position so you can access equity. It's like, this is what you work on credit for, people.
Yeah.
We're leveraging money.
Yeah. I
Yeah.
mean, especially if you're a homeowner, you have an asset. So the biggest, use it to your advantage. And there are a lot of homeowners that I meet every day that are like sitting on it. And again,
Yeah.
married to a certain rate that they had, and they're just like,
Mm-hmm.
my mortgage payment right now is, $2,000 a month, and that's what I'm used to. And
Yep.
but they may not be necessarily happy with where they're living.
Yeah. Yeah. And
Yeah.
that's what I'm running into a lot right now. It's a lot of first-time home buyers that settled on a property because, it was their first home and they knew
Mhm.
that that's what was best for them. That's all they could afford. And now they're just like, I could do a little bit more now.
Yeah,
So,
and
yeah.
most of the time, my buyers, my clients who are in that scenario, once they realize how much equity they have, I'm like, you can use all that as a down payment, or to
Yep.
use it to buy a couple of points down, and then you can get
Uh-huh.
your mortgage payment, your new mortgage payment on a home that you want right now, like what you want
Yep.
for your life right now, and won't be that much of a difference. It's usually just, sometimes it's the same, sometimes it's just a couple $100,
Exactly.
and they
And
don't
that's
realize
what
that.
you
And
don't
that's
know
the
until
big
you have the conversation, right? It's
right.
just like have the conversation, reach out to a mortgage strategist like myself and find out where you stand. And just like we mentioned, we would be offering those complimentary home value reports. We
Yes,
can do
indeed.
that too. If you own a home right now and you're just like, I have no idea where my home value is, Zillow who,
Zillow,
right?
yeah, you're gonna get an estimate. I'll tell you a story that this actually happened last week. Is that there was somebody that they were, getting Zestimates or talking to people online who had not physically seen the home, and they were thinking, "Wow, I can, sell my house." They were getting estimates that were probably about $100,000 higher than what the home
Mm-hmm.
actually would like.
Mm-hmm.
There's a difference between I could list your home, which means I can put it on the market for a dollar amount, versus how
Right.
much your home actually sell for.
Mm-hmm.
There's a difference.
Mm-hmm.
One is I'm going to put it out here for this. One's like it's going to sell for this, right?
Right.
So when I went out there and I was like, yeah, well, it's more likely it's going to sell for this amount, and here's why. We
Yeah.
had a conversation about it, and they were like, oh, so I mean, yes, and I
See?
also meet a lot of people where they're like, well, my neighbor sold theirs for this much. I saw it. I was watching it on Realtor.com or on Zillow, and this is what it went for. But everybody's
That's
house,
why you guys got to call Jen. She knows what
yeah,
she's doing.
yeah. Zestimates are difficult because Zestimates take. I mean, a lot of those online tools, they're taking from a big range, a big area
Right.
around your home. So they're not
Mm-hmm.
really like narrowing down on your specific neighborhood and specific attributes that your home has. And so that's what's important. And getting a
Yeah.
home value, getting a home value analysis or understanding that's also free. That comes at no cost. It's
Yep.
just picking up the phone, us having a conversation, setting a time, going out there and looking at it, and then talking about it. And
Exactly.
most of the time, people realize, like, oh, actually, I can sell it for this much. I only owe this. Huh. Then they start
Mm-hmm.
looking. And then
Yep.
you can get that home of your dreams. You can get the
Yeah.
home of your dreams for where you are in life at this moment. And
Yes. And people wonder how. This is exactly how. It's starting with the conversations, finding out what's out there, and just
yeah.
getting educated about the different tools that you can use.
Mhm. Yep.
There's so many.
Invest in yourself. That's why we're
Mm-hmm.
buying real estate.
Yep. And I love it.
Yep, when you want to make these life changes. Okay, so closing it up, Keena, what are
Uh-huh.
your parting words for people watching us today?
Yeah. I mean, if you are serious and you're wanting to see what it looks like for you to take that next step, whether it's your move up or your empty nester home, just
Mhm.
feel free to reach out. Let me know what your ideas may be or questions you may have. I'm always someone that's available to be a resource to people that are looking to utilize the equity route of homeownership. So feel free
Yep,
to reach out for sure. We'll have our contact information posted.
we will. Yep, we will. It'll be in the description box below. So when you're done with this video, it will be on our YouTube channels, and you will be able to read the description
Yes.
box, and we will have information on how to get a hold of either of us. And
Yep.
we are just a text message or a phone call or an email away. We'll make it super simple. So if you want to know what your home equity looks like right now, um,
Mm-hmm.
as I mentioned, I do free home evaluations, not Zillow. I'll do a free home valuation and an actual market analysis based on what is selling in your
Yep.
specific neighborhood. And then once we have that conversation, Keena at the same time, Keena can run numbers on what your equity could do for your next
Absolutely.
or for what you're needing to do right now. There is
Yep.
no obligation for either one of our services. No obligation, but what we are offering you is clarity.
Clarity. I love that. And that is true.
You don't have to have it all figured out, right? That's what this call is for. That's what we're here for. We're here to help you
Right.
that you can figure out, plan, and strategize. So don't go calling Uncle Jim and ask Uncle Jim what you need to do. Ask the people that do this every day.
Real data.
Real data. Yes, indeed.
Yep.
Well, thank you so much for being on here with me today. It was a pleasure. I learned a lot of stuff too.
Yay, good. And this was so much fun with you.
Well, yeah. Yeah,
We'll
we
do
need
it
to do this
again.
more. We'll do it again. We'll definitely do it again. And we'll see what topics we have next. So if you guys have other questions that you think would be, if you have a question, then more than likely other people do. And so we would love to get some other hot topics that Keena and I can hash out here on the next live call so that we can help your neighbors and other consumers here with any of their home loan questions, or get their mortgage strategist on the line, or if they want to know what happens in the market, what happens if I do this, and what do appraisers say about that?
Yep.
And should I fix my basement, or should I put in a pool, or what do I do, Jen? Then give us a call. So I'm Jen Ramirez. This is my friend Keena. And
it's nice being on here tonight.
Yeah, thank you guys so much for watching. I appreciate it. Thank you, Keena.
You're welcome. Thank you.
Right. Bye-bye.
Bye.